This is one of my favorite patterns, especially if you have a small account and you want to hold overnight. Get ready to take notes. Hey, be sure to subscribe on my channel and click that little alert notification bell so you get alerted when I give you more of my wisdom. What's up? Tim Sykes, millionaire mentor and trader, here with one of my favorite patterns, especially if you have a small account. You have to trade a little differently. And frankly, most people who trade these days, they want to make as much money as possible, and they really leave the low-hanging fruit, the easier trades behind. And I think that's a mistake, especially when you're first beginning, especially when you have, a very small account. You just got to find your groove. And when you're finding your groove, when you're, honing your technique, it's better to go with the easiest patterns. So the first green day on OTC runners pattern, one of the easiest patterns I know. You can hold the stock overnight. You're taking advantage of market inefficiencies, but you're basically just buying a OTC runner into the market close and selling it the next morning, either into a gap up, or if you want to be a little more aggressive, you hold a few minutes, usually they spike. Why does this happen, first of all? How is this so predictable? I want to go over some of my recent trades. You should also check out my student Jack Kellogg, one of my young new six-figure students. He made a little over $100,000 last year. Also Dominic and Kyle Williams. All three of them use this basic strategy. I know Tim Grattani uses it. I know Mark Crook uses it. I know Michael Good uses it. I use it. I've got just opportunities galore and really examples galore. I'll bring up three examples right now because this all just happened in the past week. Three examples popped up. Whenever it happens, I try to take advantage of it. First one on my list was CYDY. This was a multi-day runner, so it was spiking for several days, and then it consolidated near its highs for 4 days. And on it was either the fourth or fifth day, it finally broke those consolidation highs in like around 70 cents a share. I actually saw Jack Kellogg, announce his trade. I think he was in at 68 or 69 cents in the challenge chat room. In case you don't know, I don't just make video lessons and alerts. I also mentor, and all of my top students are in the challenge chat room. So I'm going to include a link if you want to apply to my challenge and you want to get in this special chat room. It's literally the best chat room that I know of. All of my top students are in it, alerting their trades in real time. Some of them even answer questions. They don't have to, but they just like giving back to the community that frankly taught them. So we have a beautiful little community. I'm going to include that link. Check out just below, apply for my challenge. You're not guaranteed to get in. You have to go through an interview process. You get homework. We weed out lazy people with bad attitudes, because it's a very tight-knit community. But anyways, Jackaroo alerted his buy, I think at 68 or 69. I wasn't in the chat room at the time. I look back. All the chat room has archives. I bought it it was up to 77 when I saw it, and I was like, it is a perfect breakout into the close, but I don't really want to chase it. I was trying to wait for a dip, but it just wasn't dipping, so I bought some at 77. In the last 10 minutes of the day, there was a little dip. I added to my position at 75, so I got my average to 76. It gapped up the next day, sold it at 85, 90-ish, went up. Sold way too soon because it actually went all the way up to $1.05. So I missed out on another 20%. But that was one example. I made a little over 1,000. Then I think it was 2 or 3 days later, trading days, IPCHF had the same breakout. It was a little slower moving. I chased it a little bit too. Same exact thing. I bought into the close. It wasn't dipping. I wanted it to dip. I would have gone bigger, but it wasn't dipping. It was closing strong. Next day, gap up. I sold, made roughly 1,000. Right now, as I'm filming this, I'm long the stock NXTTF. Same kind of pattern, not a breakout over recent highs like the other two, but the one thing that NXTTF has that the others didn't is that it has a history of multi-day spikes, and I'm buying it on the first green day. So usually OTC people are not fully there in the head. If you ever meet a lot of penny stock people, they're like, there's like a screw loose. So they don't usually see things right away because they're dealing with their own issues and their own bail and, therapy sessions. I don't know. They have a busy life. So they don't necessarily see these breakouts right when it happens. And they like to buy on day 2 or day 3 because they're slow in the head. And I say this lovingly. I appreciate them. Please, if you know anybody who's slow in the penny stock world, don't show them this video. We want them to continue to be slow. In fact, if you see them out at a bar, buy them a drink, introduce them to a future companion. Maybe they have lots of kids, lots of slow thinking kids that can just buy penny stocks on day 2 and day 3 while you and I will laugh because we're buying them on the first green day. So you're buying these stocks into the close, selling them the next day as latecomers, slower thinkers, less prepared, less meticulous traders see it and they just get greedy and they buy it on day 2, day 3. They don't even think about the first green day because they're not watching. This is the advantage that you have. Also with OTCs, it's very important to notice you can put your buy order in, but OTCs, it takes a little while to get executed. So even if you put your buy order in right at 9:30 a.m., if there's a lot of other people with buy orders, you might get executed not right at 9:30, maybe not even 9:31, not even 9:32. It might be 9:33, 9:35. You have to expect 3 to 5 minutes for an execution for a lot of these OTC stocks. And these aren't illiquid OTCs. They're still trading 1 million, 2 million, 3 million shares per day, but it takes a little longer and you can use that market inefficiency. And this is why, frankly, I like being long into the close because if an OTC stock is running into the close, other people who are not so slow-minded, they like to buy it into the close. So sometimes you get a run-up in the last half hour, the last 10 minutes of the day. You don't even necessarily have to hold them overnight, okay? You can sell into the close and not have the overnight risk. But often what happens is that it runs up in the last 30 minutes, last 10 minutes of the first green day, and because it takes a little while for executions to go through as the buy orders pile up. There's no pre-market trading the next day too. So that's another inefficiency. NASDAQ stocks, all these others have pre-market trading. So if you really want to buy the stock, you can buy it pre-market. OTCs, you can't. If you put in your order pre-market, it just adds to the pile of buy orders. That's why when the market opens, usually these OTC runners that are up 20, 30, 40% in one day, and they have the potential to run 20, 30, 40% the next day, all the people who want to buy, who are late to the game, their buy orders pile up. So the market makers see 30 buy orders. Maybe there might be 1 or 2 sellers right at the open, but 30 buy orders and 1 or 2 sellers, the price has to rise to accommodate all of the buyers. And again, the slow-minded thinkers in OTC land and penny stock land, they're not even that smart enough to use limit orders. So they're using market orders like morons. And that can spike the stock even more. If you've seen my BILZF trade from a few months ago, Dan Bilzerian's weed stock, when I bought it on the first green day, big percent gainer, Bilzerian had posted on his Instagram story that this was the ticker. All of Bilzerian's social media followers were going to put in buy orders the next day. I sold. I made 40% into the overnight gap up, same pattern. But because I kind of underestimated it, how many of his followers probably use market orders, I bought it at around $1.30. I sold it at roughly $1.90. Very happy. 7 minutes later, it went to $4 a share as all the market orders got executed. So every now and then you can get a home run, but don't expect that. Normally, I just go to make 5, 10, 15% overnight. Worked with CYDY, worked with IPCHF. But long story short, first green day OTC runner. The one risk I should mention before I go is that because it takes a little while to exit the trade, you have to play it a little safer. If there's no gap up, you need to try to sell it immediately. Do not give it extra time. Sometimes it comes back, but you can't risk that because if it doesn't gap up, if you are buying a stock that's up 20, 30, 40% in a day and it's not gapping up, it's not morning spiking, it can go down 20, 30, 40% the next day. And you want to be very meticulous. So oftentimes you'll see me sell right at the open on a first green day. And some people are like, why are you selling so quick? It runs another 10 or 20%. But I play it safer than sorry because I don't want to be there for a morning panic. Although, if you are in it with a morning panic, that opens another opportunity for the morning dip buy, especially if it's a multi-day runner. I don't like to dip buy just 1 or 2 day runners, but if it's a stock that's been running 3, 4, 5, 6 days and you get that panic that's due to the inefficiencies of people being unable to sell, that creates a mountain, a tsunami of sell orders that creates a panic that's worth dip buying. Long story short, I love trading the volatility on OTC plays. There are those inefficiencies. If you want to learn more, if you want to get mentored, click the link for my challenge below. I would love to teach you the nuances of this game. I don't think anybody else really teaches this stuff. You know, most people think like, oh, it's a good company, it's a bad company, it's about valuation. No, this is about momentum. This is about taking advantage of slower thinkers. This is about being meticulous and prepared. And if trading is a battlefield, I'm arming you with the weapons to destroy your enemy on the battlefield. And the enemy is poverty. And my top students and I destroy it every single day, a few $100s, a few $1,000s at a time. This is not a big money strategy. You shouldn't take 1 million share positions on these plays, but you can squeeze in a few $100s or a few $1,000. Like I said, Kyle Williams, Dom, and Jack Guru, myself, Tim Grattani, Mark Crook, we've all made so many trades, probably thousands of trades between us, making $500, $700, $900, $1,000. It adds up over time. Leave a comment below. Let me know what you think of this pattern. If you like trading OTCs, or actually just say, have you ever traded an OTC? Or also, I'll give you another thing. Do you know any slow-minded people? Don't mention their names. Just say, yes, I know those slow people. So when you're watching this video, think about those slow people, those not so smart people pushing the buy button and they're slow as they're drinking like their fucking Coors Light or something. I don't know. Just leave a comment below. Let me know what you think. Let's profit off this niche strategy. It adds up over time.